Let's get to it now with Alicia Levine. She is Chief Strategist at BNY Mellon. We're also joined by Jared Flickery and, of course, my co-anchor, Brian Sazi. Good morning to you all. Alicia, your response to what we just heard from Fed Chair Powell, because the market was higher heading into, at least futures were higher heading into his speech and then the Q&A session, and then they started to bounce around and now we are negative. What did the market not like that Fed Chair Powell had to say this morning?
So this is a marginal change. And what we heard today is that, the hopes for the V-shaped recovery have now been really pushed out for something that takes a little bit longer. And what we heard today is that the Fed is more concerned that this is going to take longer for the U.S. to recover. And it's not that we won't get back to where we were, but the speed of how this happens is really the key variable between just finding bridge loans to provide liquidity or whether or not we have solvency issues for businesses as demand dries up over time. And that's what I heard today. It was really a finessing. It wasn't a big statement, but it does suggest that now the greatest minds in economics in the Fed are really seeing this taking maybe longer than what had been hoped 6 weeks ago. And I think that's why the market softened, in addition to the fact that we're just sort of ready to consolidate here after this enormous jump higher.
Alicia, one thing that stood out to me is that Chair Powell said this downturn will have lasting damage on the economy. And when I hear that, and I'd love to see if you agree with this, I hear lower returns for stocks and all sorts of investments.
Yes, and that's true. I mean, so let's trickle this into the markets now. So your downturn lasts longer. If you listen to him to talk about the labor market, the labor market probably won't recover, that quickly. On average, during a recession, the labor market takes 30 months to recover. Okay, 30 months. So, that's over 2 years into the third year. If that's the case, then your forward returns will be lower on all asset classes because you can't just get the economy going all that quickly.
Alicia, what about some other things that Powell said this morning? He said that the Fed has lending powers, not spending powers. And he went on to say that further fiscal policy can be, quote, costly, but worth it. We know that lawmakers are now talking about a fourth stimulus package. House Democrats are behind it big time, but there are a lot of Republicans who are saying not yet and perhaps not at all. Do you think that the economy can recover and recover with some speed without a fourth stimulus package?
So that's the second thing that investors heard today, because it's clear that the next stimulus package is going to be a bit of a partisan fight. I think the $3 trillion ticket is 50% higher than what anybody was expecting in their wildest dreams, what the opening salvo would be, clearly setting up conflict with the Republicans in Congress. And Powell is saying, look, we need this for our economy because this is not an 8-week hole that we need to fill. If you remember from our earlier discussions, when we first passed fiscal so quickly, we talked about the fact that the amount passed really can only cover 8 weeks. And that was really the $2 trillion that was at risk in those 8 weeks for GDP. So if you're going longer into your recovery, you need more. And we'd like not to see a partisan fight about it, but $3 trillion is 15% of GDP. On top of the $3 trillion that Congress has already spent, you're talking about 30% of GDP. That's an enormous burden for future generations to pay off.
Alicia, do you care about negative interest rates? Chair Powell played that down. Doesn't sound like he's moving towards that or his fellow policy members here. But is that a key determinant in how far the market has rallied and what might happen next?
Look, I think here negative rates are really off the table. We follow Europe as well, European sectors and European markets. And it's very clear that negative rates have outlived their usefulness. And you can't quite get out of that quicksand once you're in it. And so it's encouraging to hear that it's unanimous that the Federal Reserve has no interest in negative rates, because ultimately what winds up happening is you crush your financial sector, you crush your banks, and the banks are central to the functioning and the intermediary part of our economy. So for me, I think it's very encouraging to hear it. And the market was pricing in some move towards negative rates, but I think the Fed message has been very, very consistent and very clear since last October.
Hey, Jared, I'm seeing that the market sell-off's gaining a little bit of steam here in the early going. Can you tell us what is driving us lower this morning?
Yeah, we're seeing energy as the biggest loser here. Crude oil is about flat, but also financials and industrials kind of leading the way down here. And just looking at the Dow heat map, we do see a lot of red. But I want to draw our attention to the big banks because yesterday we had a breakdown, in fact, in some of the bigger banks. And I just want to get to these charts here. Quarles was speaking in front of Congress, and I think his words had an effect on the markets. And basically, he said that the dividends that these banks want to pay out could be in jeopardy come June. So if we take a look at a year-to-date chart, for instance, of Bank of America, actually, let's go to 2 months. It'll be more clear. We can see there is a definite breakdown of this trend line here. Go to JP Morgan Chase, break in the trend line, Citigroup, same story. And so I think the financials are really leading the way down. And this started yesterday. Now, just a couple of other thoughts when we're talking about negative interest rates here. He omitted, this is Powell, omitted any reference to them in his opening testimony, and that caused some consternation in the bond market, but he then later cleared it up. Alexis.
All right, Jared, thanks so much. Also want to thank Alicia Levine, Chief Strategist at BNY Mellon, for joining us. Great to see you this morning.
Nice to see you guys again.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.